Hi guys, this is Richard from the Stable Center, and today I'll be covering Chainlink. Full disclosure, I do own Chainlink, but nothing I say in this video is financial advice. Anyway, today we'll start things off with more stablecoin adoption because it's a stablecoin supercycle, baby. All right, so first off, big news for crypto, and it's coming straight from Washington. Next week, the House is set to vote on the Genius Stablecoin Act, a landmark bill that would finally create official U.S. rules for stablecoins, the type of crypto pegged to the U.S. dollar. It already passed the Senate with bipartisan support and now is heading to President Trump's desk. If signed, this would be the first major cryptocurrency law ever passed by Congress. Supporters say it could legitimize stablecoins, boost adoption, and bring traditional financial institutions deeper into cryptocurrency. It could even benefit Trump's family. His sons launched their own stablecoin company last year. On top of that, the House is also voting on two more bills, one that would overhaul cryptocurrency market structure and another that would ban a US central bank digital currency. It's a huge week for crypto, and it could absolutely change everything. In other news, Shanghai, yes, Shanghai, is now exploring stablecoins. Stablecoins are no longer just a cryptocurrency narrative. Stablecoins are now becoming an international global narrative. According to reports, Shanghai's state-owned assets watchdog held a major meeting with dozens of financial regulators to discuss how to respond to the rise of stablecoins and digital currencies. This is a potential policy shift from China's hardline stance on cryptocurrency since 2021. Major Chinese firms like JD and Ant Group are now reportedly pushing to issue yuan-backed stablecoins, especially as Hong Kong rolls out new stablecoin regulations starting August 1st. Whilst China's central bank is still cautious, warnings of risk to financial stability, the fact that officials are even talking about stablecoins is huge. Many believe Hong Kong could become a testing ground for these digital assets before any full scale mainland adoption. Bottom line, even China's financial hubs are starting to take stablecoins seriously, and that could be a game changer for global cryptocurrency adoption. So let's start off the Chainlink analysis off with some risk and regression analysis. So if you take a look at the right-hand side of your screen, you can see various risk levels. The colder colors, like blue and green, represent times of low risk, which are the best times to purchase Chainlink. And the warmer colors, like orange and red, represent times of high risk, which are the worst times to purchase Chainlink. Today, Chainlink is printing a pink risk level of 0.01, which tells us that buying Chainlink today is low risk, not financial advice. Okay, so let's take things one step further by adding the regression lines. So, regression is really just a fancy word used by mathematicians to say lines of best fit. The best times to sell Chainlink is when Chainlink is trading above the red regression line, indicating that Chainlink is overvalued. And the best times to buy Chainlink is when Chainlink is trading near or under the green bottom regression line, indicating Chainlink is undervalued. Now, if we combine both risk and regression analysis, we can see that right now, Chainlink is printing a pink risk level at the green bottom regression line, indicating that Chainlink is undervalued and that buying Chainlink right now is considered low risk. Furthermore, there have only been two other times in Chainlink's history, besides today, where the price of Chainlink traded at or below the green bottom regression line and printed a pink risk level. The first time being in December of 2018, back when the price of Chainlink was trading at 20 cents. And the second time being in June of 2022, when the price of Chainlink was trading at $5.89. We can also see that each time that Chainlink traded below the green bottom regression line and printed a pink risk level, Chainlink got a free ride to the red peak regression line. If this cryptocurrency market cycle is anything like previous market cycles and tops out in Q4 of this year, we could be looking at a $300 Chainlink in Q4 of 2025. Just a quick disclaimer, mathematical models are based off of historical price action, and we all know that history cannot solely be used to predict future price action. Okay, moving over to TradingView, let's pull off or pull out the Wyckoff schematic. So not much has changed really since the last upload. Chainlink is trading in Wyckoff accumulation and in the process of forming its third LPS, which stands for last point of supply. As you can see on screen, the second LPS bottomed in August of 2024 inside the blue Fibonacci retracement support area between the 0.618 and 0.786 Fibonacci retracement levels. Fast forward to today, the third LPS also appears to have bottomed inside the blue Fibonacci retracement support area, once again between the 0.618 and 0.786 Fibonacci retracement support levels. Remember from the last video, each LPS is supposed to be higher than the next to maintain higher lows bullish market structure. Also remember that the worst case scenario for me when it comes to Chainlink this market cycle is a $60 Chainlink, which is located at the white 1.618 Fibonacci retracement. The reason this level is important is because it's the golden ratio, or the 1.618 Fibonacci retracement off the initial impulse off the bear market low. Remember, the 1.618 Fibonacci retracement off the initial impulse off the 2021 bull market top actually caught the bear market low. That's why the 1.618 Fibonacci retracement is such an important number when it comes to trading and investing. So let's actually move over to the Elliott Wave count. So with Chainlink finally starting to come alive, up over 50% off the June lows, we can start measuring out price targets for this wave 3 in green. So one common Fibonacci extension for a wave 3 is the 1.618 to 1.786 trend-based fib extension, which puts Chainlink roughly between $29 and $33. Notice how the white trend-based fib extensions over here actually intersect very well with the local top that Chainlink put in back in December of 2024. Obviously, anywhere between $29 and $33 will be major resistance. Also, remember to complete this bull market for Chainlink, we still need waves 3, 4, and 5 in green to complete white wave C of the blue overshooting B wave. Just a quick refresher for everyone, a common target for an overshooting B wave is the 1.236 to 1.382 Fibonacci retracement, which currently span between $92 and $131. So let's actually move over to the short-term analysis. So in the short term, we can see that the series of nested 1-2-1-2 structures we talked about in the last video is playing out to the upside. Very similar to the last video, I will give out conditional statements. If Chainlink breaks below $14.33, then that will trigger a drop to $11.42 to $13.47, which is the old blue Fibonacci retracement support area we discussed in the last video. Additionally, if Chainlink holds the micro timeframe yellow Fibonacci support area between $14.33 to $15.12, then simply up we go. In the short term, I'm not really interested in wave structures. I'm just interested to see how price reacts to certain levels. Okay, so let's close this video off with Fibonacci time. So just like ICP, Chainlink has crossed a Fibonacci ring, indicating that volatility for Chainlink is finally here. This might explain why Chainlink has pumped 50% off the June lows. Additionally, as explained in the last video, each of these purple vertical lines are derivatives of the 0.618 trend-based time fib extensions. Each time Chainlink gets close to these trend-based time fib extensions, a major move for Chainlink is on the horizon. All right, that's all I got for this video. Thank you guys so much for watching, and I'll see you guys in the next one. Take care.